Well, if I look at the markets overnight and what the lead-in is for today, there's three things that really sort of stick out at the moment. One is the Fed minutes, the other one is Bitcoin, and the other one is what people are pre-positioning ahead of tonight's OPEC meeting in Vienna. I think you could also chuck in some further selling coming through in the iron ore complex, where we saw spot iron ore price settle down 2.4%. The futures market in the Dalian overnight in the Cyclum session was down 2.3%. Some stability seen in rebar futures, and there does seem to be a bit of an extrapolation now between steel and iron ore, but certainly the iron ore market's down a touch, and we saw some good selling again coming through in Vale's US listing. Interestingly, that BHP's ADR is actually up a touch, and I think that's probably more to do with the variability in its earnings from petroleum and obviously oil. What we saw is actually a really pretty decent drawdown in the crude inventories. They came down much more than what was expected, both for crude and gasoline as well. Obviously, people are pre-positioning ahead of that OPEC meeting tonight, and there has been some talk that was floated specifically from the Russian energy minister about potentially extending the agreement for 12 months, which is a new concept, and that would probably support the oil market and perhaps even see a rally and certainly mitigate this buy the rumour, sell the fact playing out if that transcends. So that's really what we're going to be watching over the next 24 hours. I think equity markets are going to be very focused on what happens in the oil market there. So is it a 6-month extension? Is it a 9-month extension? Is it a 12-month extension? Is there going to be probably a deeper cut? So that's a very low probability indeed. Or is there going to be no extension whatsoever? That's the playbook which we're seeing at the moment, and that's really going to what oil's going to be trading around. Bitcoin, as I say, is up another lazy 11%. That's up 8 days in a row. It's sort of exponential move. I think this is a massive fear of missing out move. I don't necessarily think there's any kind of news driven behind this, but there's so much momentum. There's so few people counter trending this move at the moment that this continues to go up. Saying that, the fact that I'm talking about this and the fact that it's on my radar, and while I haven't been trading this myself, suggests that I could be that contrarian taxi driver sort of indicator, and may actually see a bit of a collapse in the short term. But certainly, I wouldn't be shorting that. Not at the moment. Certainly, price is going exponential, and it just seems to be gravitating higher and higher every single day at the moment. So that's definitely seeing huge flows coming through in there on across the high net worth guys, across all of our retail components there as well. Equity wise, pretty much a lifeless session, hence why we saw the VIX trading below 10. The Dow traded in a measly 89-point range, the S&P in an 8-point range. So there really was no pulse in the equity market. And I think if you look at the SPY futures, they are pointing up 7 points today. No real rhyme or reason. BHP's ADR, as I said, is up, but it's a fairly flat market for us. It's difficult to see where we're going to see any kind of alpha being driven from portfolio shifts today. The Fed minutes, as I say, is something that's definitely worth a focus on. I think the market has responded slightly more dovishly than we expected. We had been positioned and expecting a fairly sort of hawkish shift from the central bank there. That hasn't come, and hence why we've seen specifically the sort of belly of the curve. The 5-year Treasury is down quite heavily, down about 5 or 6 basis points. And I think the implied probability of a June hike has fallen very modestly. It's still 76%, so it's still a base case. And if you look at what they've said, it does solidify the idea that we are going to see a rate hike in June. Unless we see a collapse in risk sentiment and the S&P really falling out of bed, I think it's probably a done deal in my mind. But I think the biggest notion was really the focus on the balance sheet and the fact that they're looking to rein in their balance sheet probably in the December meeting, in my opinion, although there is some focus that it could be September. And I think we need to work out the world we live in, where quantitative easing was such a positive for equity markets. The idea liquidity feeding into the equity market, credit markets, and various bits and pieces, was a positive. Now, what happens when we're going to start seeing that liquidity being reined in? And that's something that we focused on there very clearly. And they're going to cap the measures, which I think is going to be quite an important point. So that's a new paradigm that we're living in. There's been an intense focus on that balance sheet and the balance sheet reduction going forward. But overall, a fairly flat session there. Bit of US dollar selling, bit of gold buying gold in gold. Aussie dollar back above the 75 handle. Not a huge amount to drive today. I think we're going to keep a firm eye on focus on China and keep an eye on the Dalian exchange and see what happens in commodities there.